SoFi, is it a buy underneath $30, moving towards 50, then potentially to 100? Can it make a Robinhood move, one of its major competitors in this fintech space? We'll talk about it today as a financial breakdown, as well as a technical chart breakdown. What's going on, everybody? My name is Dr. B. Hopefully you're doing absolutely amazing. Welcome to the channel. If you're new, if you're returning, I appreciate the support. We're above 2,000 subscribers at the time of this video, so please make sure to continue to hit that like button, subscribe, share with your friends and family, and turn those notifications so you know when a new video is dropped. If you'd like to see more of these individual stock full analyses, please let me know what you'd like me to go over next. All right. But SoFi was a highly requested one because it has that potential to absolutely take off above the $32 level. All right. So without further ado, let's jump into it today. And hopefully you'll take note for any of my beginners out there, how you kind of fully analyze a company of whether it is a 2-year buy, 5-year buy, 10+ year hold. And you can look at it from their financials and also their use case. All right. Are they innovative? Do they have future ability to handle a recession? Things of that nature. So we'll talk about it. All right. So first of all, let's jump onto SoFi's general website. Okay. And we want to understand, what is their product offering? What is the company? That's the first question you want to understand. Is people buy stuff all the time. Is like, they don't even know what it is, right? So you have more conviction on a stock or a company once you understand how it provides a service and or product to the consumer. SoFi, in this case, is a fintech company, okay? It has all these offerings of personal loans, banking, credit score management, mortgage loans, student loans, investing app, home equity loans, HELOCs, credit cards, crypto, and there you go, right? Savings accounts. So it is a one-stop shop, and that is what they have provided, is one-stop shop with the best offerings, being able to push the savings back onto the consumer, not having brick and mortar specific locations, and it's a complete digital platform, which is where we are headed. All right. So SoFi is innovating, moving towards the future, but still offering those very basic banking services. Okay. So that is the general offering of what SoFi is. So do we agree that it does have a positive use case? Yes. So I have this full breakdown of SoFi here. So now that we've established what it does and what it is, we can say it's a one-stop shop, digital financial platform. People can borrow, save, spend, invest, and protect their money with the SoFi ecosystem. It has 3 major components: financial services. So when we're looking at these components, we want to make sure that, okay, what is the competitor? Where are people going other than SoFi to use these services? Financial services, checking, savings, investing, credit cards. Okay, they're going to the major financial services companies, the JP Morgan Chases, the Wells Fargos, the Bank of Americas. So you still have those big wig companies, Charles Schwab, that people are still utilizing, and they have a lot of money. They've been proven over years, but now people are questioning, like, is that really the best, right? Do they actually have the best products and services? So that is the financial services sector, as they're breaking into that, trying to be innovative to capture potentially that younger generation as well upcoming. Lending, personal loans, student loans, home loans. These have been intimidating for many people over the years, is saying, man, okay, I got to go in, I got to apply for these things. And SoFi is trying to make that less intimidating factor to actually get your first home or a personal loan that you may need, or apply for college, or whatever thing that you're trying to do to learn something and get educated. Okay, for student loans. Technology platform. So where do I hold my money? Do I have a savings account? All right, can I invest? All in one place, one-stop shop. Now let's jump strictly into the competitors within this space. And we already mentioned some in the financial services sector, but let's look at some of these kind of more in the digital space. Affirm. Yeah. Robinhood, in my opinion, is their main competitor. Robinhood is the leading technology. The only thing Robinhood is not doing right now is offering those mortgage loans, student loans, right? And they may break into that, but they may not. They may just stay where they are. Okay. So that is what SoFi has on Robinhood, is being able to have the ability to purchase a home, so on and so forth. So if Robinhood starts breaking into that sector, it might be over. Okay. So Robinhood, there you go. Block, formerly Square. Yeah. Upstart. Right. So if you see any of these, you're like, Brian, I love Upstart. I love Block. I think they're going to be, great. I think even PayPal might step into some things. Cool. this video is over SoFi. Okay. So there is our competitors. There's what we know about SoFi. Now let's jump into their financials. So the next thing I like to do is analyzing, okay, is this company going to be lasting for the next 5 years, 10 years? Can they sustain themselves through a recession? Okay. So the first thing we want to notify is the company profitable? Okay. Is the company profitable? And what we can do is we can look at the net income here on SoFi. If we go from 2019, 2020, 2021, 2022, 2023, and into 2024, if we look at this net income piece right here, we can see that this number used to be negative all the way up into 2023 until they became profitable in 2024. They were headed towards profitability into 2023, and then 2024 was their big year. So if we associate that with the chart, look exactly where the buying came in heavily on SoFi. So when people were saying, man, how do you catch these companies before they break out, right? You try to research the company before, as they IPO, as they get steadily, involved. And you see IPO was back in 2020, right? Had a huge pump into 2020, into $27 from $10. But then a company typically has to prove itself, right? Once it IPOs, it is still, in this case, a small cap company or a medium cap company because it has not proven itself to be yet profitable. Okay. So look at what SoFi did into this $4 and $5 range. Look at the bottom of my screen. That was 2023, 2023, 2023, 2024. Okay. Started to formulate, and this is what the chart associates, this bullish flag will begin to be very interesting. Okay. Look at this bullish flag where it began to have a little bit more volume, this volume profile right here around $7, $8, right? And we see it break out of this bullish flag with volume. Look exactly where that came in when they became profitable, right? So if you can do your due diligence on understanding how to look at a company's net income financial sheets, keeping up to date with their quarterly earnings reports, and looking at the use case of a company saying, man, this could be new on the block, right? Then that's where you get those under $10 stocks taking off to 50, 60, 70. Now, the caveat is not every $5 to $10 stock is going to be sustainable over the years. All these AI stocks, all of these quantum stocks, like you really have to look at these stocks and say, is this a pump and dump? Or is this a company that's truly going to sustain itself over the years with free cash flow, being able to sustain a recession, being able to grow year after year, offering new products, staying up to date, AI, crypto, so on and so forth. All right. So in this case, in my opinion, SoFi is doing that. Okay. As it's become profitable, it's had increasing quarterly revenue growth, as well as the chart is showing sustained buying on every dip. All right. Now, the final thing I like to look at with the net income, you can go further into it as well. But even if you don't have this, Brian, where are you getting this stuff from? You can look on the quarterly earnings release and you can see their quarterly earnings. All right. So what I want to show you here is their cash equivalents. Okay. This is 3 billion. Okay. 3 billion right here, not 3 million, 3 billion in cash. Now, if we go here to free cash flow, we can see that the free cash flow is still negative, but the cash available total is 3.27 billion. So what you want to see over the trailing 12 months, that's what TTM means, is you want to see that more in the positive. Okay. So as a company begins to grow, right, you want to see more free cash flow on hand, because that is a company that can sustain a recession, that can sustain a bear market downturn. It is not going to be the company that gets hit the hardest. So the companies that get hit the hardest during recessionary periods, downturns, are companies that can't really sustain because they can't borrow against with those low interest rates. They can't borrow as aggressively because they don't have as much free cash flow to run the company, so on and so forth. So I want you to see here, free cash flow for Apple. Okay. Key free cash flow for Apple. Apple's annual free cash flow, 108 billion. You see that's in the positive. So a company can have cash on hand, right? Meaning, okay, I can sustain myself. We're rotating, we're borrowing money. Cool. Great. We're growing. Yes. Can we sustain ourselves? We just became profitable. Cool. Right. So when you see a company like Apple or any other company, that company, why people keep buying the tech stocks higher and higher, Google's, Apple's, why these Magnificent Seven, Mag 10, whatever you want to call them, these top tech companies, because they don't need to borrow anything. They don't need to borrow money. They just have so much free cash flow in their offerings. They can innovate, grow, continue, fire, lay off, do whatever they need to do, right, to free up cash flow. So in that case, if we look back at SoFi, that is why SoFi, right, has the potential to drop down lower back to 18. When people don't think it can drop back lower to 18, drop back to 15, right, in a recessionary period. So let me give you buy zones on SoFi. So in summary, to make this video short, sweet, to the point, do I believe SoFi has sustainability over the next 5 years? Yes, because it's innovating. It's also profitable. It also is growing to more free cash flow. It also has more use case for the younger generation coming up, okay, including that crypto offering as of recently. So let's jump onto a monthly chart, and I want to show you my buy zones on SoFi. Let's clear this up. Now that we've got the financials, the use case to understand that, okay, I want to buy this company. Now the question is, how do you, if you're new to SoFi, where do you get in? Okay. Ideally, you want to get in on red months, dollar cost averaging on red months like now, underneath $30. So if you can start a position, not financial advice, start a position underneath 30. Okay. Just say, I like to use the example of $1,000. Just say someone has $1,000 and they want to DCA dollar cost average 3 different times. You want to put the first, ideally, $250, $275 on the first draw. Okay. Underneath 30, start your position underneath 30. Okay. And as it grows, you can add more to it and say, okay, cool, it's back above 30. You may not get further down. Okay. That's why DCAing or dollar cost averaging lower, continuously putting it in, is a great methodology that has been the span of time. Okay. So if I draw this area here, look at where SoFi is holding up. This is the IPO resistance. Former resistance becomes support. So this is our first zone that SoFi is trying to hold up and collect buyers right now. Okay. Right at $28. Okay. Now, Brian, what if SoFi falls lower because it's made a run from 7 to 32? Okay. That is a possibility that you have to be prepared for. So do I think SoFi is a great buy underneath 30? Yes. However, where's the possibility, if I go on a daily chart, that SoFi has the possibility to pull back? And this is where I get my kind of more precise buy zones. Precise buy zones is you see these moving averages that I can turn on the chart. I'm on a daily chart. That means every candlestick represents a day of what happens to SoFi. I like to buy quality stocks that I want to get involved in. If it's my first buy, or if I want to find another re-entry, or if I want to load up heavier, I like to buy closer to the daily 100 and the daily 200. Okay. If it gets underneath the daily 200, that is where I might question just a little bit. I might take profits. I might re-enter. I might have a stop loss, something of that nature. So if I roll this up here, this is where SoFi ideally would be a heavier dip buy pickup slash, is it doing okay? Would be at 20. Okay. Because that would be the next resistance turned into support. And that would be from the highs, if it did it from here, a 40% pullback. Okay. That is in quote unquote bear market territory. So you ideally want to buy said good stock that you want to consider DCAing to. Find the weekly or monthly high that it is right now. And if you see a little bit of stalling, I like to see a 5% pullback from the highs. So right now, 5 to 10. So if I drag that down there like that, well, let's get an info tab. That might be a little bit easier to see. Data price range. Okay. Right now, SoFi is 11%. So you want to buy at a correction territory from the most recent highs. So that is 10%. So SoFi is technically a buy at 28, right? It's at over that 10 to 15% pullback. You can begin buying some SoFi shares. Okay. This is not necessarily about options calls or options trading right now. I'm just talking about the general stock shares. Okay. So there's the buy. Brian, what if it pulls back underneath 20? Why do you think 25 was such a key level? Because that was that 20% pullback. That is in bear market pullback territory. So 10, 20, and then if you get a deeper pullback here, that's at 40, right? That would be ideally where I would like to re-enter a little bit heavily or begin questioning SoFi. Would be closer to 20 at that high volume node. So I'd probably put this up to 20. I probably wouldn't want, maybe the daily 200 moving average can meet us at $20. So 20, 25, and right at 28. Okay. So there's your buy zones. If you want your chart to look very similar, I would say right here at $20, 25. And then, if we can get 18, 15 again, that'd be awesome. Right? There is a possibility. So let's watch it and see. Ideally, SoFi, if I draw a trend line from the lows, okay, parabolic move up. If I draw a trend line from the lows, just say SoFi meets us back here somehow. See there? That is still a higher low from this trend that we had right there. So can SoFi pull all the way back to 15 to 18? Yeah, it can. Okay. Brian, I don't know when. Turn your alerts on, be mindful, understand based on your financial advisor or your own investing strategies, right? Where you want to have a load up zone. If you got an average cost down here at 10 and you want to protect, maybe, keep a stop loss at 20. Who knows? Maybe trim some profits up here, add more, whatever it is your strategy is. I'm not on here to tell you what to do. I'm just saying that SoFi has the potential for 50, right? So if it has the potential for 50, if you add in underneath 30, then you're going to be winning regardless. So it doesn't necessarily matter, right, where potentially you get in. You have a better average cost. It's just a matter of dollar cost averaging on solid companies, if that makes sense. All right. So I love SoFi. As long as it holds 25, we're good. 25 right now is that key big, heavy buyer zone that we see 25. Okay. So I want to watch that 25. As long as it holds up 25, we can keep dollar cost averaging heavy, right? And then 20. All right. Let me know if you like this video. Let me know if you enjoyed these, what other stocks you'd like me to see do analysis over down below. And also if the process helped you, I try to make it as simple as possible. Sometimes you can have more, less in between. I do some more analyses here, there, in between, just to, increase my conviction on said stock, just to make sure that you're not getting overzealous and adding too heavy at certain areas. And that the stock is going to have profitability. They're going to have free cash flow. That they're growing year over year. And one last thing I was going to show you here is if we look at SoFi reports Q3 earnings, a record net revenue of 962 million, record member product growth, adjusted 38%, 49%, so it is growing tremendously. That is what you want to see from a company that you're trying to see, like, man, can this go to 100? Can this, kind of like Robinhood, can this continuously innovate, keep adding new products, keep adding new services, right? Have more marketing offers. You see them more in the wild, right? Partnerships. So in my opinion, SoFi, great buy, great opportunity. Just want to give you some levels. 25, 20 are your buy zones, at least for right now on SoFi, and we'll adjust accordingly. Peace, love, and blessings. Thank you so much for the support. Share this out. Give me a like, comment, subscribe. Let me know what you'd like to see further. Until next time, talk to y'all soon.